Hi everyone, thanks so much for joining this market live on quite an unprecedented day. We've obviously got the conflict in the Middle East, and that is having a ripple effect across markets. Now we're going to dive straight into the charts and see what is going on. This chart is a really interesting one, and I will go into a bit more detail. It basically is the Strait of Hormuz, and it will show you, and what it is showing you there, sorry about that guys, is the number of ships that are going or not moving through the Strait of Hormuz. That's really important for the oil price. So we'll talk a bit more about that in a moment, but I want to start with world equity indices just to give you a flavor of how markets are reacting to today. Please follow my pointer. As you can see, a sea of red across Asia, especially Japan and the Hang Seng, but also across Europe there. Look, 2.3% decline in Euro stocks, 1.2% decline in the FTSE 100. The CAC, the DAX and the IBEX in Spain, and the FTSE MIB in Italy, all down more than 2% today. If we look at equity futures as well, they're also pointing to a slightly lower a decline again for US indices as well. We're seeing a bit of variation in performance. We've got Palantir is up 3.6% in the pre-market in the US. Remember, that is a key kind of AI stroke defense firm. So that's going to be in demand. BAE Systems, that's a UK defense firm, that's up 4%. Nvidia is extending its declines after last week's sell-off. And I also would like to show you the, this is an index, sorry, just bear with me just while we get this up. An index of airlines. Airlines are doing very, very badly today for obvious reasons. Just this one here. So this is the Bloomberg index of global airlines. As you can see, sharp decline, one of the sharpest declines in well over a year, essentially eradicating all the gains that they've made this year back to December lows. So there are some quite sharp declines out there, but overall, I think you could argue that the stock market reaction has been fairly moderate. But let's take a look at what else is going on. What hasn't been moderate is maybe the oil price. The oil price is just below that $80 per barrel level. I'm just going to bring up the overall commodity space so we can just see it broadly. As you can see, complete opposite to equities, sea of green. If you follow my pointer here, as you can see, WTI crude up 8%. Brent now up 9%, but look at this, a 47% gain for nat gas futures. So that is very, very important there. Qatar has just announced that it is halting all LNG production because of strikes from Iran. That has absolutely seen nat gas surge. Now that's going to have a ripple effect beyond that. That's pushed down some of the European indices, although the losses, as I said, are quite moderate so far, considering the unprecedented situation we find ourselves in with the US and Iran facing off. Now, we did expect that. What we didn't expect was such retaliation from Iran and such retaliation around the region. So that is really, really critical. But I think that this spike higher in the natural gas price is a bit of a concern. Obviously for Europe, take a look at European consumer stocks as well. On the margins at this point, it reduces the chance of rate cuts, particularly from the Federal Reserve and the Bank of England. So a Bank of England rate cut for this month has been reduced to 65%. That's down from over 80% just last week. So it is having a ripple effect beyond the borders of the Middle East. However, even just a couple of years ago, if you told me that Iran and the US would be at war and the oil price would jump by 8%, I would have been laughing. I'd say there's no way the oil price will jump much more than that, more like 30%. So even though it's a big move, of course it is, this is the 53rd biggest move in the oil price, a daily move for the oil price in history. It's not that historic, is what I'm trying to say. The oil price can move quite a lot. This isn't a particularly big one, although it is a big move in and of itself. I don't think we're seeing triple figure oil because of what's going on in the in the Middle East, sorry. And the reason why is that we've got a much broader supply base. So for example, we've got the US is the world's biggest oil producer right now. So that is certainly limiting upside. And we're not above $80 per barrel in Brent, as you can see here. But if we take a look at the Brent chart, as you can see, big jump higher. We are at multi-month highs now, at the highest level of the year for sure. We got to a high of $82, but then that was sold. So we're somewhere in the middle of the range today, but still seeing some very big gains there. So 8% in oil. But as I said, I don't think this isn't panic stations, right? If we look at it on a absolute basis, $80 per barrel, yes, it's high. Yes, it's the highest level for quite some time. And there are a few things that could make it a lot worse. So it's kind of the highest level now for a while there, for over 5 years. But we will be, monitoring this situation. The Strait of Hormuz is essentially closed, which is what I was trying to show you with that map. If I go back to it, now this is the Gulf of, or the Strait of Hormuz, sorry. And this is the Gulf. So we've got Saudi, we've got the UAE, we've got Dubai, we've got Qatar, we've got Bahrain. All of these, we've got Oman there as well. So sorry you can't see it. It is very dark, but that's just because it's a live update of where all the ships are. Now, there's a lot of ships there, as you can see, but as you can see, they're not moving very much. So a few ships are moving, but they are absolutely bunched around the ports. And that's because they are not moving. And that is a sign of that Straits of Hormuz, things are not going back to normal. That will lead to potential supply disruption, because 20% of the world's oil supply flows through there. And so, yes, the US is very important, but there is also this big bottleneck in the Strait of Hormuz. It's not just the fact that Iran hasn't officially closed the Strait of Hormuz. Remember, they do control it and they could close it. They haven't done that. But it's the big problem for the shipping companies, because it's going to cost them a hell of a lot more in insurance to get them around there. Added to that, they've just had a double whammy of a rise in the oil prices, which is going to make the fuel more expensive. So that's why there's going to be this premium in oil for some time, I think, for as long as this conflict is maintained, for as long as there's kind of drones and bombs between the two sides. There was a bit of an escalation in the conflict. Obviously, today we saw, everything from drones going to Cyprus to US servicemen getting shot down. But anyway, that looks like it was friendly fire. But there definitely has been a continuation, if you like, of things over the last few days. And I think usually these things don't spread to the wider region. So we just need to monitor that and see what that means. But do watch this Strait of Hormuz. We'll certainly be watching it, and we will be updating it, of course, all the time. If we look at gold, let's take a look at the gold price. The gold price is moving higher, comfortably now above 5,400. Definitely makes those lows below, 4,500 look like quite a long time ago right now. So we're comfortably above there. This really is a complete environment for gold, right? There's inflation fears with the spike in the oil price, and we've got geopolitical fears. Those two things very good for the gold price. So that certainly is something to watch. I did mention about the nat gas price. This is the nat gas chart. Just look at it. I mean, that is hellish almost. This massive gap higher than the disruption that we saw in January. So 50% move in the nat gas price, and that comes on the back of that Qatar news. Now that is a bit problematic because of what it means for inflation risks across Europe and the UK. We are importers of natural gas. We need that. Now we are coming out of the winter months. That should be a positive. And that might limit the upside, but for now it really is panic stations, and it does just highlight this is a very fluid situation, and markets are reacting to everything that goes on. So any headline risk. So that is something to watch out for. If you are trading, please be aware of that. Now, if we go back to the World Equity Index, I just want to show you something. Obviously, there are variations in indices, how indices are performing. We've got bigger declines in the Euro Stoxx index than we do in the FTSE 100, which is down 1.38%. Now, the FTSE 100 had made multiple record highs last week, closed at a record high on Friday as well. Very, very close still, down about 200 points, but very close still to that 11,000 level, currently trading at 10,730-ish. That 11,000 level, I think, is still realistic for the FTSE 100. And the reason why is that this is almost a perfect environment for the FTSE 100, because you've got oil, so you've got some chunky oil firms in the FTSE 100. You've got chunky defense firms, BAE Systems, as I mentioned, up more than 4% today. You've got very little tech. So tech, this is the events in the Middle East are just another layer of concern for markets. You've got AI fears, disruption caused by AI. You've got private credit risks. And of course, now you've got events in the Middle East. Well, those two of those things, because the FTSE 100 has a lot of miners, it's got some chunky oil firms, and it's got a lot of defense. It's not got very much tech. It just makes it more resilient in this environment. And I think if we do see stocks recover, I think the FTSE 100 could actually do quite well in the current very uncertain environment that we're in. But yes, just going back to those airlines, they're a massive drag. Obviously, we've got ING here. And then there is, Air France, there's KLM in Europe as well. That's dragging down the index because obviously you can't fly to the Middle East. All of these hubs are closed, Dubai is closed, Doha is closed. That just makes it much harder to get to so many different places, including, you know, Australia, New Zealand, Japan. So that's just something to watch out for there. We'll be watching very closely for when the airports reopen, and I would, when that happens, if that does happen without any conditions, then I would expect the airlines to bounce back, because right now it's very reactionary to what's happening in the Middle East. One area which has also been gaining has been the dollar is attracting some safe haven flows, and it is the top performer in the G10 FX space today. It's also really strong globally, because obviously when you've got this issue, geopolitical issues, you know, potentially a war, we do see a run for the dollar, and you can't really match the dollar for its liquidity. It is the most traded currency. 50% of global trade takes place in the US dollar, 90% of commodity trade as well. And when you're seeing that uplift in commodity prices, remember commodities are priced in dollars, it's just more demand for dollars. So we've got above the 200-day moving average there in the dollar index. That's trading currently at that is a move above 98.36, currently trading at 98.50, just below that level. Obviously the next level to watch is 100, but we don't know where, you know, as I said, very fluid situation. Today is the first trading day of this new scenario. So we are seeing some inflows into the dollar. As I said, I don't think it's a real rout. We're seeing a rout, yes, in some of the commodity space, but not everywhere. But you know, we are seeing a rotation out of stocks into the dollar and more liquid assets. So that is playing out here today. But whether or not it continues those gains to 100 or beyond in the dollar index, that will really depend on how it plays out. I just want to show you the VIX index. The VIX has popped higher as well. If you look to the right-hand side of my screen where my pointer is, it's popped higher. It's currently at 23. That's above the average of the year of the last 12 months, which comes in at 19. So it is a bump higher. And we have seen that markets have been rattled and jolted by events in the Middle East, but it's not a real crazy route like we saw in April last year when the VIX, you know, jumped right to 60. And we're more like at the levels that we were just under 30 in November when we saw markets take a bit of a wobble as well. So, you know, volatility has been volatile, but has been trending a bit higher. So maybe the fact that we're adding some other layer of concern to markets is just a sign that we won't go back to those real low levels of volatility at the end of December, start of this year, where we actually fell to a low of 13 on the 24th of December, and we've been mildly trading higher since then. So what happens next with the VIX will very much depend on where markets land. I want to show you the FTSE 100 as well, because I did mention that I think the FTSE 100, the conditions are ripe for it to continue to recover, or not recover, sorry, to make record highs, maybe get above that 11,000 level. But we have seen a big pullback. But I think any pullback will be used as a buying opportunity for that. Let's just take a look at that map. No, not too much going on here now, but as you can see, just as a reminder, you know, if oil isn't moving, then that affects the supply, that disrupts the supply chain, and that's what's causing the upside pressure on the commodities. Now let's just go back very quickly to where the commodities are. And what we saw at the European Open was a bit very early this morning. So around 8 o'clock, we saw a real move higher in the oil price to that 83 level. So we saw about a 10% gain, and then it pulled back again. So maybe as the US come on board in the next hour, about an hour and 15 minutes, we could actually see some big push higher in the oil price, maybe try and get that Brent crude price above 80, but that just seems to be like a knee-jerk reaction, and then it's kind of coming back to a more reasonable gain. But obviously this is the one to watch where my pointer is here, that 40, now it's 42% gain for nat gas. So very, very volatile. Nat gas is very volatile anyway, but you've just taken off a huge amount of LNG production with Qatar halting all its production. So that's something to watch there. But the energy space is where it's all at today, guys. There's so much going on with this. We've also got payrolls at the end of the week, and we've got quite a packed data calendar with that start of the month data. We've got payrolls, we've got Eurozone inflation as well. So lots to remember, but I will leave you there. Thank you so much for joining. And of course, this is a very fluid situation. So keep watching the research, following us on our socials at XTB UK, and we will speak soon.